Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
All right, everybody. Welcome to another great edition of Freed on Business. It's going to be a great show today. We're going to talk about pulling money out of your house or your parents' house or your house if you're over 62, using a Heloc or a reverse mortgage. Helocs, there is no age requirement. Reverse, there is. We're going to be on with our good friend, Ed Cairo. I want to thank our friends at Warren Henry who've been sponsoring the show for well over a decade. If you're looking to buy or lease a car, remember our good friends at Warren Henry. Everything they've got a showroom up at Biscayne and 101st that has Land Rover, Range Rover, Infiniti, Jaguar, Lincoln. Down in South Dade, they've got the top-rated Land Rover, Range Rover store, probably in the country. Up in Gainesville, they sell Audis. Down in the Keys, they sell all their great nameplates. And remember to check our friends out at Warren Henry. Where's our good friend Ed Cairo, the number one mortgage broker that I know? Hey, there he is, Eddie. How you doing?
Hello. Hi, Jim.
First, Eddie, welcome. I want to thank you for helping me close my loans. We're doing a bunch of HELOCs and reverse mortgages, which is what's prompting today's show. I wanted to get started, Ed. Why would somebody use a mortgage broker? I posted a little bit about that earlier today on LinkedIn. Why would somebody use a mortgage broker rather than going direct to the bank? Ed? Give me a pitch. Why would people work with a mortgage broker?
Well, because first of all, working with us is always a positive experience, number one. But more than that, when you go to a bank has a stiff set of guidelines that they follow, and they're a lot less liberal, let's say, than we are when we're able to do these deals. We've got 15 or 20 different lenders that we work with, and they all have different guidelines. So we're able to manipulate different deals and kind of fit the round hole in the peg, you might say, the peg in the round hole, I should say.
And the lenders you work for are banks for the most part.
Sorry?
They're banks for the most part, right?
They are banks. Yeah, they're all banks, but they all have different nuances in their guidelines. So when we understand what they are, and we're able to work with different banks depending on what the person's situation is.
Okay. Now let's talk a little bit about that. Let's get started. Let's talk about the reverse mortgages first. To me, there's a whole bunch of pros with the reverse mortgage. First of all, it allows somebody to stay in their home. They can tap their equity. As people's needs change, it allows them to have funding. Maybe something happened. They need a little home health care. So this allows them to pull it out. You can, take this instead of your payouts from your retirement income, or it can become retirement income. You can use it to pay off your debt. It's the proceeds aren't taxable. The heirs are not left with any problem. They can pay that loan off. So Ed, tell us a little bit about what's making these reverse mortgages so popular today with your clients.
Well, right now, when you have a person, let's say in a retirement age, and they own a home or whatever the case may be, things have gone up. Things are a little more expensive today. They're on a fixed income, so they're living off, let's say, Social Security, maybe some pension income, whatever the case may be. Things are getting a little tight for a lot of people. So what they can do is they can tap into the equity that they have in their home, in their property. And in a lot of cases, especially in South Florida, there's a lot of positive appreciation in a lot of these houses. So there's quite a bit of equity sitting in those homes. And if they're, let's say, as an example, they have a Social Security income and pension income, and they have a payment of $3,000 a month that they're paying on this mortgage, that puts them in a real tough situation if things are a little tight for them from a cash flow standpoint. So what we can do is we can come in, we can do a reverse mortgage on their house. And basically what that means is if they have a mortgage, let's say, and they owe $250,000, let's say, and the reverse mortgage is, let's say the house is worth quite a bit, $1 million or 600 or whatever the case may be, they would pay off that what they owe from their original lender, their forward mortgage that they have now. And the best part of it is they don't have a payment anymore for the rest of their lives, which is key.
Wow.
But if there's enough equity in the property, which in a lot of cases there is, they almost get like an equity line, so to speak, to use, which is based on the equity in their property. So they have like an account that they can go to where the biggest part of this is the payment for the principal and interest part of the mortgage is gone. So they don't have to pay that anymore, which gives them a tremendous amount of cash flow. And if they want to travel a little bit or do whatever, they have a little side account that they can work out of and access some money.
Well,
So that's why people are using it.
It used to be, at least I recall, and maybe I'm wrong, that the reverse mortgage would come, you'd get a big lump sum, bang, it comes there, and it sits in your account. It starts running the interest clip. When the rates were low, you couldn't arbitrage anything, so you were paying a lot of interest and stuff like that. Sounds like me, things have changed. If you're able to leave a lot of it in the bank or not draw it down, you're not paying interest, which is
Right.
good, and
Right.
leaves your equity in the home. And as a flip side, a lot of people are helping their parents out, giving them a couple of bucks here, a couple of bucks there. This actually gives the parent the upper hand and gives them their financial freedom again.
Right. And the nice part about that is that if they're a little savvy, they don't have to use that money unless it's, let's say, an emergency. But on the other hand, if they want to use it, they certainly can. And for them, not having a payment is really key to this, because the only time this will get paid back is if they, at the time of their death, or if they sell the property, and then this money gets paid back, including the interest, and the heirs get whatever is left. So the people themselves can live off their equity of their property, which really is nice. It's a nice thing. And also, by the way, we can do reverse purchases also, where they're coming down from up north, they're buying a house for $800,000. We can do right around 50%. We can do a reverse purchase. So we are able to finance that, and they don't have a payment on the house that they're buying.
In
They
that
don't use
one,
all
it's
their cash.
so it's again, they come down, they buy the house all cash,
Mhm.
and then they're able to pull the cash out in a tax
No,
protected way, or
No, we would actually do a reverse purchase. So it's a reverse mortgage when they're buying the house, just like it would be on a forward mortgage, like you'd have to come to the table with that. But we secure it beforehand. And the nice thing is we bring the money to the table. So instead of them accessing $1 million out of their bank, or 800 or 600, or whatever they're paying for the property, they can access approximately half of that of their own cash. The rest comes in the way of a reverse mortgage, and it acts the same way. It acts as there's no payment for them on that particular part of the money. They keep that money in their own bank, okay? But at the time of the sale or their death, let's say, it then gets paid back out of the proceeds of the property.
so it's a 50% loan.
Approximately, depending on the age, and there's a couple of factors, but for the most part, that's about right. So, like,
Wow.
right? I mean, instead of you coming down to Florida, you just sold your house, you have 800,000 in the bank, you're buying a $600,000 house, you then only have 200 left. Well, if we lend you half of that 600, now you still have $500,000
Five.
to use in the bank, which is very nice for somebody that's over 62 and all the other criteria that's involved.
I would like that. I'm over 62.
Oh, that's right. Okay, so get ready
Actually,
to buy
I'm
a house.
not. I am 62. So I guess at 62, I become eligible for this. Is
We'll
that
give you a
it?
discount, Jen. Don't worry.
I do look pretty good. Maybe I'm not 62, and I'm just saying that to
That's what I
qualify
think.
for
I
the
don't know. I
reverse
think you're
mortgage.
lying to us, but okay.
So the process is the same as a regular mortgage: appraisal, getting all the tax returns, getting in this case, I guess, the Social Security return, that kind of stuff.
Yeah, I mean, for the most part, they're all different, but for the most part, that's pretty much what you're looking at. The only thing you want to make sure is that you have enough income to pay your taxes and insurance, which that gets paid by you. But the principal and the HOA, but the principal and interest portion of the mortgage gets covered, gets taken care of.
Okay, but the other expenses that would come out of the proceeds of the reverse mortgage also, right? I could
Mhm.
use that to pay the HOA fees or whatever.
Sure, you could, if you wanted to.
Okay. Okay. So it really is a way to give somebody financial freedom. I guess that they could also take some of that equity and give it to their heirs up front, so they could actually have the heirs enjoying their inheritance, I guess.
Well, the equity would remain in their bank. In other words,
No, but they could draw down. They could draw down on that and give 50 grand to one of their kids or whatever.
they could if they had to. Yep. Yeah, the
It's
taxes and
actually pretty
insurance
nice.
HOA they're responsible to pay though. Every year when it's due. But the fact is, the nice part is that now they don't have a payment, which is key, because even if they're putting a good chunk of money down, they have to pay a payment every month, which infringes on their cash flow, which really that's what it is today, is all about cash flow. Making sure they have enough cash flow that they can live comfortably.
So, Ed, is there a location limit? Or there other things? How about mortgage insurance? How about flood insurance? All that other stuff, property insurance. So the house has to kind of, we're in Florida. We're only going to be doing this stuff in Florida.
Mhm.
So in Florida, they would have to have their roof has to be in good shape. They have to get their homeowner's insurance, which isn't easy. They have to get the flood insurance, which isn't easy. Maybe they were flying without this coverage before. So these are some of the expenses they would have to consider going forward that are different than the ones that it does change their expense profile a little, right?
It does. But basically, it's similar. It's a mortgage. It's an FHA-backed mortgage, and all those things are played into account. There's no question. But for certain people, this might be a very nice tool to use. And again, it's all about cash flow. As you get older and you're on a fixed budget, cash flow is king. That's really what we're talking about. And having enough cash in the bank to do whatever it is that they need to for as long as they need to do it.
And you work with lenders that specialize in this, right? And this isn't really a bank product. This is real. I mean, this isn't something you're going to walk into Wells Fargo necessarily and get. This is much more of a specialty product.
It's a specialty, yeah. And whether they have it or not, I'm not sure, because I don't really work with them, but they could.
I didn't mean to use Wells Fargo. I meant to just say a general bank.
Yeah, in a general sense.
And they would have their program. You have like 5 or 6 different reverse mortgage programs, right?
Mm-hmm. And again, that's the answer to what you said before, is that we have a lot of different ways that we can do things. Where you walk into a retail lender, they're only able to do what they do, and for the most part, they're order takers. I mean, they're not trained to do much more than what they're told to do. Where we can think outside the box and we can do things that are a little bit different.
Yeah, well, I've seen you shape and create the income stream, so it's easy for the bankers to process. We're going to take a quick break. We're going to talk about pulling money out with Helocs. We're doing that. Ed and I, again, are doing that with a lot of my high net worth clients. They have very good first mortgages at low interest rates and a lot of equity that they've seen build up over the last 3 or 4 years. Again, we're only doing this in Florida. And so Ed and I will talk about what to expect if you want to pull some equity out on a HELOC. And we'll do that as soon as Mr. Mendoza helps me pay some bills by thanking our friends at Warren Henry. Mr. Mendoza. I just love all those drone shots that Mr. Mendoza gets me over the weekend. He's the best. You know who else is the best? Our friends at Warren Henry. I want to thank them for sponsoring the show for well over a decade. I want to thank Larry, Eric, Warren, Ismet, Jack, Gio, Maytal. I know I'm forgetting somebody. I always do, but they're all tremendous members of our family at this point. We love them. They love us back. And they give us the ability to get great cars at great prices and share that opportunity with you. And we all know that when you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check Warren Henry, Land Rover, Range Rover, Infiniti, and Jaguar. They've got all that up at Biscayne 101st. They also sell Lincolns up there. They've got a great store where they do the Land Rover, Range Rover down in South Dade. It's an award-winning store down there. They've got a great store in Key West where they sell all their different nameplates, and up in Gainesville they sell Audis. They're all great cars. They all come with the Warren Henry Advantage. It's a long list of services that you get when you buy your car. Of course, if you have to leave your car for service, they'll give you a free service loaner. They'll also guarantee you're getting the best price on your new car, on your lease on your purchase, the trade-in. They'll make sure you're getting a great value on that. They'll give you 3 days to return your car. Nobody ever really does that because they just absolutely love those cars. I know I do. Join me, my beautiful wife, my mom, lots and lots of my clients and friends, more so every day. We're all members of the Warren Henry family. You should be too. Always the best price, always the best service, always Warren Henry. Hi, everybody. I'm Jim Freed. I'm the founder of Sandstone Realty Advisors. I'm a real estate business person. My personal brand is that I self-actualize by helping other people achieve their dreams and goals. I bring them peace of mind by helping them solve their problems. If you need to pull cash out of your house, you're hearing us talk about it today with either a Heloc, which we'll talk about next, or if you need to pull some out and want to use a reverse mortgage, call us. We do this all the time, every day. I teamed up with the folks at American Home Finance because my specialty in the past has been commercial and still is. But I solve problems for people with my friends at American Home Finance. I can also help you raise capital with my new blockchain technology. And of course, we're doing all kinds of standard loans as well with community banks, regional banks, and debt companies, real estate companies from all over the world, operating companies from all over the world. Some of the biggest families in real estate in South Florida work with us. You should too. Give me a call, reach out to me, DM me. And remember, whenever you call me, it's always all about you.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
Right, we're here talking residential home lending with Ed Cairo. Welcome back, Ed.
Hi, Jim.
Hey. Ed and I work together on the residential component of my business. We both have what's called an NMLS license, which is makes us a fiduciary to the people that we're working with. Give us a call, reach out to us. We want to help you with your home mortgage. Ed, we talked about reverse mortgages in the first segment. Let's talk about home line of credit, which allows people to borrow against their home. The advantages are that it's similar to a credit card, but it's got a much lower APR than a credit card. The interest becomes tax deductible. It gives you flexible withdrawals and repayments and allows you to boost your credit history. Some of the disadvantages include your home is collateral for the loan. It reduces your equity in the home. It's a variable rate loan. And if you're not careful, you can run up a big balance. But Ed, we really didn't do a lot of these home equity loans before when people were getting the fancy low interest rates, high leverage loans. Now everybody's got that really low interest rate on their home. They've seen an incredible increase in value in the home. They don't want to replace that first mortgage. And this is a way for them to tap the equity in their home. Yes?
Yes, that's exactly right. Couldn't have said it better myself. That's exactly right.
And the process for this is similar to getting a standard first mortgage, easier, harder, what?
It could be a little. It's not harder, but the debt to income ratio, meaning how much the income is compared to how much debt they have, is reduced a little bit because the lender's in second place, so they're a little bit tighter when it comes to guidelines on an equity line. But like you said, it's secured by the property, so compared to a credit card or whatever, I mean, the rates and so on and so forth are a lot better because it's secured by the actual property. It works for people, and they can write off the interest, like you said.
So one of the things that we're helping people do, we've got a couple of deals like this we're working on right now together. Mm-hmm. One is one of my high net worth clients, all their cash is tied up in a real estate deal. The market's moved on them. They're going to have a difficult time the second half of the year selling their property. They needed some cash. They have a real 3.1 mortgage that we got them on their home. They only have $1 million on a $5 million house. So we're going to help them get about $500,000 here. We've been working with them. We're working with their financial people internally to do the documentation while the client's on vacation. That's one good example of a HELOC we're working on. Ed, that sounds to me like basically the perfect client there. Lots of equity, doesn't want to touch their first mortgage. What are the terms on this? How long can somebody have a HELOC on their home?
And there some are different, but in most cases these are 30-year terms. A lot of them, they can access this money for the first 10 or the first 3. There's different ways it can be done. So they can access the money. And a lot of times when they put, let's say, a big purchase, you put $500,000 equity line in somebody's home and they decide to buy a car, as an example. Even though these loans are variable, they can lock in the rate if it's a large purchase. So they paid $40,000 for the car, they can lock in that interest rate at whatever it is for that time, for that particular purchase.
Wow.
Most cases, they're all different, but in most cases, that's usually what happens. So that's a nice thing. I mean, even if let's say the economy gets a little worse, let's say the rates go up a little bit for the short term, they can at least know that they can lock it in for that period, for that amount of money that they used.
Well, that's tremendous. I know a lot of my developers, they want to buy a new boat. It sounds like they can do that with this. In fact, that's what our client is probably going to do.
It's probably true. Yeah, that's true. And people have a tough time accessing credit today, for a lot of reasons. So if they have the equity in their house and they have a good credit score and, obviously good credit history and all that good stuff, good income, these are easy to do. They're not difficult at all, and we can get them done for people relatively quickly.
And again, we talked at the top of the show about working with a mortgage broker or working with your bank. Your bank is going to have one product it offers. It's going to play a one-trick pony. Probably doesn't want to do the HELOC anyway, for a variety of reasons that are below the surface. But they basically don't want to hold on to the mortgages because if they go bad, they can't sell them to the government. They got to keep them on books. So that's why they don't want to do them. So we have banks that this is their business. They're very quick at it. Again, do these require full doc, light doc? How do those work?
Full doc. They require full doc. I actually have one, which is a brand new product, and I haven't even done one yet. But they have a 12-month bank statement loan equity line, which means that if they don't have tax returns, we can use the last 12 bank statements and use the income on that to show their income. That's brand new, so I'm not versed on it yet because I haven't even done one. But for the most part, it's full doc. Good credit score, they can get a line of credit, which is nice because that gives them the versatility to do whatever it is that they need to do. They might have to pay income tax, or kid goes to college, you never know. And today people are a little bit short of cash based on what, the current conditions are.
They could also, a lot of people are staying in their homes longer. They don't want to move. They don't want to break, they're locked in because that great mortgage they got. This is a way where they can add a pool, add a room, add a house. add a roof, change the roof, do the light landscaping. This can be like a home improvement loan.
It could be a home improvement loan. And I'm tell you what, the roof that you mentioned is coming up a lot because of the insurance companies. The useful life has changed and so on. So I'm getting a lot of calls with people anticipating having to put a roof on, and they want to put a line of credit in place. So when that time comes, they have the money to be able to do that, which is really important.
It really is. Yeah, it really is. What are some of the other products that you're seeing? Reverse mortgage, HELOCs. What are some of the other creative things you're doing over at American Home Finance that our folks would be interested in hearing about?
We can do some, when you have somebody with relatively good credit, and let's say they put less than 20% down, they have PMI, mortgage insurance. Okay. So we can do combinations of first mortgages and HELOCs to avoid that. So instead of putting 20% down, they can maybe put 10% down or 5% down, depending on the program. And they have a first and they have a simultaneous equity line closed at the same time, and they avoid having mortgage insurance. So on a high priced home, let's say, they can avoid $200 or $300 a month by not having that mortgage insurance, and they can pay down the equity line whenever they want, and they can lose that whole payment of the equity line down the road without having to refinance or do anything. To try to get mortgage insurance off is not easy because you have to show an appraisal. Some banks require 20%, some require to be 22%, really depends. And man, they do not want to let go of that mortgage insurance. So this way you avoid the whole problem. If you want to pay your equity line down to zero, you certainly can, and you can use it again. So that's one way we do things.
So I want to kind of end right there, because that takes us right back to where we started, which is why use a residential mortgage broker. And it's because you have the ability to be creative, have these different products, a lot of different programs that you can use depending on what people need. So I want to thank you, as always, Ed, for being on the show today. We put up in all the written documentation what our NMLS number is. We do that because we've been specially trained after the Lehman Brothers meltdown to be fiduciaries and to look out for our customers. I say a lot of times that when you call us, it's always all about you. It very much is the truth. When you work with us at American Home Finance and the Mortgage Brothers, sorry, your brother didn't photobomb today. We go out of our way to make sure you understand what's going on and you get the best product and the best execution for your personal needs. I'm going to always thank Ed Cairo for coming on and being a part of the show, Ed. I look forward to closing more loans with you. We've got a bunch in the pipeline. We're going to get a bunch more loaded up. And I want to thank you. Please stick with me after we do the close, because I'm going to talk to you in the green room for just a second.
Okay.
I'm going to remind everybody that today's show was sponsored by our good friends at Warren Henry. Remember, when you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out Warren Henry, Land Rover, Range Rover, Infiniti, and Jaguar. They're all great cars. They all come with the Warren Henry Advantage, which is a long list of services that you get when you're a member of the Warren Henry family. It includes a free loaner car. You can return your car after 3 days if you don't like it. They'll guarantee you're getting the best price on your lease or your new car purchase. They'll guarantee you're getting a great value on your trade-in. And of course, you get to be a member of the Warren Henry family. So you should join me, my wife, my mom, all of our friends and our clients said, I'm going to get you and the brothers in those Warren Henry cars too. We're all members of the Warren Henry family. You should be too. Always the best price, always the best service, always Warren Henry. I want to thank Mr. Mendoza for being there with us on the show today. Remember, we always drop a new episode Wednesdays at noon. Next week, we're going to be talking about blockchain technology and financing with my partner, Jim McCarthy. Remember, I do this every week because I love it. I want to thank our sponsors, Warren Henry and the University of Florida Center for Real Estate Studies. And remember, the person that wants to do something finds a way. The other finds an excuse. Now go out there and make it happen. God bless you, and God bless the United States of America. Mr. Mendoza, take it away.